Inland Revenue has signalled the need for tax hikes in the future to pay for an ageing population. In its long-term insights report, IRD acknowledged that governments could cut spending to save money, but suggested exploring new revenue streams such as what's long been considered political kryptonite, taxing capital gains. Political correspondent Zane Small reports.
It's within the halls of power in Wellington where decisions are made about how much tax New Zealanders must pay. And with a growing ageing population, the tax department has signalled the need for citizens to fork out more in the future.
Can't deny that it is an ongoing issue. The superannuation is largely not funded, and with increasing claims.
Inland Revenue's long-term insights report out for public consultation says it is expected that over a quarter of the population will be aged 65 or over by the late 2050s. The ageing of the population and other factors will create fiscal pressures over the coming decades. It goes on to say Inland Revenue has assessed options to reduce these constraints within the current income tax system. This included considering the case to tax more capital gains.
It will help bring in some more money. Estimates have been $2-3 billion and more.
New Zealand's tax system relies heavily on income tax and consumption tax, or GST, which together make up about 88% of government revenue. So with a growing ageing population, Inland Revenue suggests that taxing capital gains could make a meaningful contribution to addressing long-term fiscal challenges.
The report is the latest in a long line of evidence that we either fix our tax system or we continue to watch our country crumble.
But the Finance Minister is not interested in tweaking the tax system.
I don't think this is the time for a capital gains tax. What we all need to focus on now is our economic recovery. And the good news is we can do that while still balancing the books.
The 2019 Tax Working Group estimated that in the long term, a capital gains tax would generate around 1.2% of GDP in revenue. But Jacinda Ardern's Labour government, in coalition with New Zealand First, couldn't get it across the line.
The responsible political debate should not be about whether we fix our tax system, it's about how we go about fixing our tax system.
Inland Revenue warns, however, that capital gains taxes can also give rise to high compliance and administrative costs. New Zealand also already has something close to a capital gains tax, known as the Bright Line test. If an investment property is sold within 2 years, income tax must be paid on the profit.
Capital gains flows tend to be they fluctuate a lot according to state of capital markets. So it's best not to use that money to lock in regular spending.
Yeah, I'm always concerned that if you introduce a new tax like a capital gains tax, that it'll put people off starting businesses in New Zealand, expanding their businesses, hiring new workers, because they will see less reward for doing so.
What's our value add to the world? Do we really want to hold ourselves out as being a tax haven and the race to the bottom, or do we want to be a country with strong, universal, basic services?
In these halls, the real power is winning the political narrative to address the looming problems of tomorrow.